February 2025 has ended and we have now entered the month of March. And this is going to be my monthly, which I do on the first, in the first week of every new month, slash weekly forecast for the month of March. So from a monthly perspective, I want to take a look at what I'm anticipating the month to do. And then I'll then take a look at the week, what I think that particular week is going to do, and how I hope to trade it. But before I do that, as is customary for me to do, I want to take a look at the economic calendar quickly. Now, this week is quite packed, but the only 2 days that I'm really worried about are Thursday and Friday. We'll see why shortly. Monday at 4 p.m., we have ISM manufacturing PMI on the dollar. I'm not too bothered about that. If I have a position before that, let's say during London kills on Monday, which is today actually, since the candle has already opened, I'll take it. The only, of course, caution I need to exercise around news events is if it's 15 minutes to the time, 30 minutes to the time when this news release is coming out, and I see a setup then, the protocol is to wait until after the news release, and then if the trade entry is still valid, I'll take the trade, not shortly before. Tuesday doesn't have anything, so that's fantastic. I'll be looking out for that day to see if there are any setups I can take. Now, the reason I like days on which there is no news is that you can trust the volatility and the movement in the market. If your setup tells you, oh, price is likely to trade bullishly for today, there's no major economic events that can just come in and suddenly change that direction or make the volatility of the day go haywire. Of course, they generally tend to be lower range days and not to trade as far. But if you're an intraday trader and you're looking to capitalize on 30 pip, 40 pip move, then of course that isn't a problem for you. Wednesday at 2:15 and 4 p.m. respectively, we have ADP non-farm employment change and ISM services PMI. Now, these ones, especially ISM services PMI, can really make the market whipsaw quite a bit. So I'm going to be wary about it. I'm only going to be taking setups that present themselves during London kill zone if they do present themselves on that day. But what I have found on days like these is if there's major news coming out during New York, London will probably consolidate. Or if London gives you a setup, that setup will fail. And then New York will then give, the proper setup. But again, it will all depend on what the market is doing and how I feel about the trade going into it. Now, the reason I'm wary about Thursday and Friday is that on Thursday, the euro is announcing their main refinancing rate. This is the equivalent of FOMC on the US dollar. My recent testing and review of my trade journal has told me that before, so what I'll do is, since it's the euro, if I see a trade on the pound on that day, I'll take it. If I see a trade on New Zealand dollar on that day, I'll take it. But I've realized is that major news events, because I treat the corresponding news release on the dollar as a day to avoid in the market. So I don't trade FOMC, I don't trade CPI, and I don't trade NFP. Now, the main refinancing rate on the euro is in the same category as FOMC. Of course, it does not have as much of an impact on the markets because it's the euro and not the dollar. But for the correlated pairs that I trade, I have often found in my testing that if the pound is having their FOMC equivalent, or the euro is having their FOMC equivalent, or New Zealand, it tends to impact all the other correlated pairs. And so I am much better served treating Euro's main refinancing rate announcement and their monetary policy statement the way I treat FOMC. And so on this day, while it's obvious that I'm not going to be trading the euro, I have now extended that to include even the correlated pairs that I trade. And so Thursday is a no trading day for me because as far as I'm concerned, it's FOMC. Friday, NFP, no trading. That goes without saying. Now, this is what the monthly candle did. It's interesting because from my previous testing now, I did not do that for the month of March and I can't do that in this video anymore. So, but if you look back at the last 10 years, you'll find out that February's candle is almost always a doji. Let's try it. This is February 2024. Look, doji. This is February 2023. The only exception. February 2022, doji. February 2021, doji. February 2020, doji. February 2019. Eh, Slightly bigger body, but you can see still a relatively small range candle. February 2018. Okay, second one that didn't follow the trend, February 2017, and you can see that they're almost always bearish months as well. Go all the way back to, let's say, 2015, doji. So February's tend to be small range months, tend to be dojis, and they tend to be bearish. Just an interesting fact. Of course, it does not mean that's the corresponding, that the month that you're entering is going to do exactly what the previous ones did. But while we're at it, let me see what. So March 2024, similar. March 2024, oh, big bullish. March 2022, big bearish. March 2021, doji. March 2020, of course, you can't count that. We all know what that was. March 19. So there does not seem to be any established pattern or trend that I can expect the monthly candle to follow. But what we can see is that, at least on the euro, this February candle closed within the range of January's candle, almost two exactly identical candles. So did not take out January's high, did not take out January's low. That's what we call an inside bar. Of course, this means that, so if you have two monthly dojis side by side, you can imagine what that means on the daily time frame. You guessed it, massive consolidation. So this is essentially one big consolidation since November through January and then February. It's a consolidation. Why is price consolidating? Well, if you go back to the monthly, we can see that price traded into a monthly fair value gap. So on the macro, when you zoom out to the higher time frame, all of the lower time frame noise begins to have a bit more clarity, begins to make more sense in light of what is happening. So why will 2 whole months go nowhere? Well, that is because for 3 consecutive months, there was a lot of bearishness. 3 months bearish candles closing at or below the previous candle's low is a big deal, because this is what that looks like on the weekly. This is what that looks like on the daily. Many, many, many days of bearish price action. So when price trades like that and comes into a significant point of interest, price does not rebound from there in the way that it would do, for example, on the lower time frame of a 1 hour fair value gap or a 4 hour fair value gap or even a daily fair value gap. No, price tends to sit, marinate, and decide what it wants to do at these weekly and monthly levels. So what that means is that there was all of this, then price, boom, shot out of that, took this low out, now traded into a monthly fair value gap. When price trades into these higher time frame key areas, a battle goes on. The people who pushed price lower are trying to see, can we push price any lower, or they are taking profit. The people who are monitoring this level as a key level and saying, we want to buy from here, are also loading up their long positions. The result, 2 months of indecision in the market, because the market is pricing in all of the orders, trying to determine what its next move is going to be. Now, us being intraday day traders, it doesn't really matter to us what the market eventually decides to do, because, as you know, if this were a daily candle or a 4 hour candle, completely untradeable. But if it's a monthly candle, you will find trading opportunities there. Just that moves might not be sustained. So you have a lot of moves giving short-term impulses, reversing on you, coming back down. And that's why when you understand the market conditions, what you want to do is adjust maybe what you consider an entry or how long you hold your trades for. Now, if you're a trend follower, for example, and for any reason you were able to cut shorts here for the next 2 months, you could have been smiling to the bank, but you can't do that here. No long position kept going, no short position kept going. So the fact that price has now created two dojis inside this monthly fair value gap, what does that mean? Does that mean price is going to break lower to the downside? I do not know. Does that mean price is going to break to the upside and reverse? I do not know. I can't call it. I don't decide what the market does when it gets to huge levels like this. What can I do instead? Read price, read order flow, see where the moves are happening, and get on board. So if you go down to the weekly, you can see that that consolidation looks a bit clearer now. And the previous candle, like I said, this candle has already opened because I'm recording this video on Monday morning, well, around midnight, 1 a.m. on Monday. So we can see that this candle closed pretty strongly bearish. Just going off of that, took out the previous week's low. And so I'm going into this week with a bearish, let's call it a bias. Another reason is that price failed to take out these equal highs that we had been calling and expecting price to take out for weeks. So if price is refusing to take out, a high that we have called out and targeted, and is instead taking out the previous week's low, at least in the short term, I have a bearish bias. Now, points of interest begin to become apparent when you take a look at something like this. So, between Wednesday, Thursday, and Friday, this daily bearish fair value gap was created. What do I want to see? Now, before, as a matter of fact, as I was about to record this video, I had an alert set here because look at where price closed. I did not expect that before Asia session, price was going to gap up. So the euro gapped up and then it has already triggered that alert. Of course, I'm not trading by this time, but I like the fact that price is now seemingly rejecting from here because that is giving me relatively equal highs. So my bias still remains. If at some point during London or New York, today being Monday, or at any other time in the week, price takes this high out, and any other highs that it might have formed and trades into the daily fair value gap, I would look to take short trades to the downside, targeting this low in the first instance and seeing what else price has to offer me. Now, I cannot, again, we are still in this consolidation. Nothing is to say that March is going to break out of the consolidation. It price can consolidate for 3 months, 4 months, 5 months if it wants. So I cannot, for example, predict that price is going to come all the way back down here, or all the way back down here, or all the way back down here. But what I can do is, whatever it is that made price to not take out this high, to create this daily fair value gap, to trade below this low, I can expect that momentum to at least continue in the short term and on the lower time frames. I'm only looking for a 3-hour move on the 15 minutes time frame. That's about a 40 pip move. Way more than enough. If we take a look at the pound, similar situation, this bearishness. Now the pound has been a little stronger than the euro, as you can see. This bearishness has also created a fair value gap. Thankfully, although price has been trading bullishly, that fair value gap is much higher in price, and so the trade idea is still intact. You will notice that we are trading off of this weekly and daily level, but I like the fact that price barely tapped into it and has created relatively equal lows. So my bias, at least in the short term, is something like this. I would like to see price trade higher into this daily fair value gap, give me an opportunity to ride the train downwards to then take out these relatively equal lows into this daily and weekly fair value gap level to then potentially resume this overall bullishness. So that's what I'm looking at. I have a similar position on the New Zealand dollar. New Zealand dollar has been particularly weaker than all the others. So you'll find that there's been a 1, 2, 3, 4, 5, 6 day bearishness on the New Zealand, whereas on the pound and on the euro, those 6 days have been consolidations. Price has gone neither here nor there, right? So on the New Zealand dollar, similar situation, but I'm a little wary of the New Zealand because for me to take a trade, I would need to see something like this, price trades, maybe even into it or just below it. Give me an initial reaction and then take that reaction's high out before I can look to trade to the downside. But if I have a bearish bias, the New Zealand dollar offers me the clearest bearish bias. Why? Because on the weekly, and remember I was calling this all the way back in February on the 3rd. This low was here, price came very close to it. You can imagine when February candle was trading around here, it would seem like a no-brainer that price was going to take that low out. But what did price do? Instead, on the weekly, has now created this relatively equal low, came back up to tap into this monthly fair value gap. I was bearish when price came into the monthly fair value gap, but it did not give me any entry according to my criteria. So and so this huge bearish week, there was no trade for me to take to the downside. But that's what it is. And so now that price has seemingly resumed its course of action, I will be looking for price to come all the way back down to this low right here. And so this strengthens my bearish bias. That's what I'll be looking to trade this week. No trades Thursday and Friday because of major news. And short term bearish, then bullish, then bearish.